Okay, so there was some cold frames and all that kind of stuff, and
So
so we're ready for spring now, which is
now
going to
we've
be
got our
around in only a few
physical,
more months.
and now we've got our physical health looked after because we're eating right. We're going to be looking after our
Financial health.
yes.
We see we didn't even plan that, but we did plan to have Jennifer Black on the show today. And Jennifer,
Hello,
welcome
Jennifer.
to Liquid Lunch.
Hi, thank you for having me.
So now you're a financial planner. Is that accurate? Just
Yes.
so we can, get down to it. And I know you've got a book that you've written, which we're looking forward to discussing. But that's not everything you do. So let's talk about your practice as a financial planner for a little bit. First of all, how did you get into that?
Well, actually, I got into it because I had a previous career. I was an athlete, and I got injured. I played tennis professionally, and when I came back to Canada after getting injured, my mother was actually in this industry, and she was a chartered accountant background. So we actually, sat down, kind of talked about what she was doing, and I came in and helped her, and really found that I enjoyed what I was doing and helping her, and what she was doing to help her clients. So it really resonated with me that we could really help a lot of people, and so it was over, I guess, almost 11 years ago now that I joined her, and that we've been doing this.
Okay, so now, and you've written this book here too, right? Managing a loan, and this is really managing your. Well, maybe you can just describe what the book's all about.
Yeah, sure. So the book, we actually published that last year, and it was just in the summer, in August, and it's really about providing information in a simple, easy to understand way for widows and widowers. So we've focused on that area a little bit in the last few years, and we really wanted to focus on helping them from a financial perspective, but making it easy for them to understand. So what we did is we actually just took some case studies. So we took stories of people who came to us after the death of their spouse, and told those stories, and then talked about some of the things that they need to do going forward, as well as some of the things that they could have done in planning better ahead.
Right.
So this is not necessarily about after the death of the spouse. It's also planning before, so that you're not stressed out after the death of your spouse, or
Absolutely.
at least less stressed, because obviously you're stressed, but at least that's one element you can take care of.
Absolutely. There's a lot of tips and ideas in there about planning for, the eventuality of one of the spouse passing away. But, there's also ideas of what people need to do going forward after the death of their spouse.
So, which is, it's unfortunate to have to talk about
Yes,
this, but
yeah.
the reality is that chances are that both spouses are not going to die at the same time, so that one of them, and in fact both of them, should probably be considering or planning for that eventuality at some point, as they're looking forward. Now, and the other thing that I was going to say was that some of the rules, the government rules, the taxation rules, the investment rules, and these kinds of things are often, people have their lives to lead. They can't be thinking about all the little rules that they need to be aware of to plan in an optimal way for their financial well-being, which is why we need people like financial planners to who are aware of that stuff, so that they can help people to plan for that eventuality. And it sounds like what you've done here is you saw a need for this particular occurrence, and you concentrated all the knowledge necessary around. Is this a Canadian specific?
It is Canadian specific, mainly because any of the tax information we talk about is going to be Canadian specific. Similarly on the legal side, anything that we would touch on would be Canadian specific. Like you mentioned, there's a lot of little things for people to know and understand in order to make the most of that situation, and really looking at things like the final tax return, and things like that. There's things that can be done to minimize taxes in that final year of death. And in knowing everything, it's a lot, and it requires a professional who deals with it all the time.
Yeah, because people are too busy to think about that kind of stuff. And a lot of times you just don't want to think about all that kind of stuff.
And the other thing too is you want to build that trust as well with that person, with your financial planner, so that when something tragic happens, you don't have to spend your time finding somebody new. You've got somebody you can trust who can take care of that, so you can deal with the other things that are more important at that
Absolutely,
time.
and focus on yourself and your well-being.
Yeah, so I think that's really important too, is to nurture that kind of relationship that, with a financial planner, like you would with people have a relationship with a hairdresser. So and your doctor, so why not with your financial planner? Because it really is personal.
Well,
This is about your
you want to feel comfortable with the person
trust.
that you're dealing with, and that they have your best, or your financial well-being, your best interest at heart.
Yes.
So now, what kind of people do you work with?
So, widows and widowers is one area of our business.
Probably a lot more widowers than widows, right? Because we were
No,
talking
other way around.
Oh, okay.
A lot more widows. So widows are females, right?
Oops.
Widowers are the males, and so
Okay. Right,
it's about 4 to 1 widows to widowers, generally. And
That's astounding.
And so that's about 20% of our business, working with widows and widowers. The other areas that we've had success in getting clients and working with people is teaching professionals, and we actually have a group of engineers, as well as about 30% of our business is with business owners.
Mm-hmm.
So it's like small business owners? Like entrepreneur type?
Small to medium business owners,
Okay.
yeah.
Okay.
Not as many entrepreneur type as individuals who have, I guess they would be entrepreneurs, but they've kind of grown
Oh, so
their
they're
business
beyond-
to a level where they've got a lot of staff and
Like above 50
and-
employees, that kind of thing.
yeah, and they're looking at succession down the road, things like that we can help them with and really work on and make that part of their plan and help them understand implications of that. And
So-
then, sorry, I was going to say, and then we have a lot of retirees, so that's kind of our biggest part.
I'm just a question about. I maybe I'm wrong, but I'm getting the sense that young people today tend to not have the kind of money available that needs to be managed or planned. That they're basically there's. I just wonder what your sense of this is, because being in the industry as an economic barometer, are there fewer people coming up with the kind of disposable incomes that really needs to have planned or should be planned, because they're just living day to day so much?
Well, I think that's a great point that you bring up, because absolutely, it's something that I see, pretty much daily. People are not taking the ownership of their own retirement and saying, I need to actually start doing something if I want to retire. I need to start saving. I need to, just get an understanding of what needs to be done and how much they're going to need and things like that. There's, the teacher's pension. A lot of people look at that and say, oh, well, they're a teacher. They've got the teacher's pension. That's great. How lucky they are.
Yeah.
But there's a lot of money that is taken off their pay over the years that goes into funding their pension. And if the average person were to just do the same with their own paycheck and take that same percentage out and put it towards their own retirement, it would be, it would be substantial savings, and they would be able to have that type of retirement income.
So you're saying that anybody, really, as long as they've got an income, can have the kind of smart, fat retirement plan that the teachers have, because they've got professional money managers managing that giant fund, right?
Absolutely. And I mean, the thing that people need to realize is that those teachers who receive the pension down the road, they have contributed, and a portion of their pay, and a significant portion of their pay, has gone towards funding their retirement. And so it's something that I see more and more, like I said, people are not taking the onus on themselves to fund their own retirement, from the day that they start working, like a teacher does. As soon as they start working, it starts.
But is that because, to your point, that they're being squeezed, and maybe is it because they're not taking ownership, or which I'm sure are some, but also are they not making enough? I mean, I know people now who have so much debt coming out of school.
Yeah, and
That
or
they're
that they're
paying for
struggling
10
even because people say an easy way is take 10%, just bank it all the time. But if people are just struggling to pay there's not enough month at the end of the money, then how can they
Money at the end
even
of the month?
how can they put 10% away when they don't even have enough to pay?
So are you facing? Because I would think
Well,
that you
that's-
would be facing a little bit of an issue with that.
Yeah, I see it later. I don't see it at the time.
Yeah, I
So
guess that
our
makes sense.
clients start around 500,000 of investable assets and up. So I see it with clients that are referred to us through accountants who might have that 500,000, have the expectation that they're going to retire in the next couple years, but when we do calculations and look at that with them and try to help them understand where they are today, where they're saying they want to be in a couple years, and what that's going to look like, it's not meeting the goals of what type of income and cash flow they wanted in retirement. So that's really the end that I see it on.
Okay.
But well, speaking from my own experience, it is difficult to manage the income and then the expenses, and then whether it's going out and trying to buy a home nowadays, is very expensive,
Having
and then
kids,
having children
yeah.
and things like that. You just have to keep in mind that being able to put that money aside in order to fund your future is important.
I guess, it makes me think that one of the challenges you would have would be, we're such a quick fix society. We don't think necessarily that long term. So we don't think, oh, I need to save this for 50 years down, especially when you're really young. You don't think, oh, I need to save for when I'm 60 because I'm only 25. I mean, 60 seems impossible to reach when you're 25. And you think,
But it comes on quicker than you might think.
Well, I know, but try to tell a 25-year-old that, right?
Exactly.
And it's out of sight, out of mind kind
Right.
of thing. So, and we're such a quick fix, like I said. It's everything is gimme, 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 gimme.
Right.
Not
Immediate gratification.
Yes.
That's Sandra. She's very immediate gratification.
It's true, though. It is true that we want to see immediate results and things like that these days. But really, it is about taking the time to just understand your situation and see what you can do, and changing that mentality too,
Yes.
right?
Yeah.
You have a TV that works. You probably don't need a bigger, better, brand new
Yeah.
one. Maybe wait till prices come down, or
Yeah,
things like
yeah.
that. Where
Yeah, so-
as a society, we're starting.
So how much
we
of
get into
your
that,
role
but
is education then?
a huge part of our
Yeah,
role is
I would
education.
imagine,
Huge part.
because that shift in thinking, I would think would be necessary, because there's not a lot of a lot of people are not thinking that way, right?
Yeah, I mean, even individuals will, talk about education, the book, right?
Yes.
I mean, that demographic is all education. Very often it's the individual who didn't manage the finances who is the one that's remaining, or the surviving spouse. And
Wow, how
you know,
ironic.
I mean, you look at in a family unit, it really is. There's kids, there's finances, there's the shopping, there's everything else that needs to be done, and it really is divide and conquer. So one kind of takes on that role.
Well, it's
of
just
the
specialization,
finances.
right?
Right,
Like the
and-
husband probably, and,
It is still
with
mainly-
your ratio that you were saying where, 4 to
1.
1, the widows
Mm-hmm.
are left to deal with this stuff. But chances are the guy looked after all the financial planning, right?
We are still seeing that. It is.
So when that happens, then that woman is stuck, and they got to start doing stuff that they never did before, right?
And that's it, and that's where the education comes in. So what we do is we don't just make recommendations right away. We help them get an understanding of what they have, what is a mutual fund, what is it for, what is an equity or a stock, and what is, explain those things to them. How does that work, and what type of accounts do they have? There's some things that have to be dealt with quickly, but for the most part, you have time to explain and get them to understand, so that when you do make recommendations, they can see and understand why those recommendations are being made. They have a bit of a foundation. So that's really a lot of, a lot of education in that type of scenario, for sure.
Well, education, but it sounds like when you sit down with them, your first job really is to listen and just to assess their current situation, which they may not even be aware of, because all of a sudden probably some lawyers dropped all this stuff in their lap and they don't even know how to go through it or how to interpret it.
Yeah.
And so you sit down with them and go through the documentation and really assess what they have and where they're at with it. And then only after that can you start to formulate a strategy for them. And then the education, I would think, comes in, and you show them what is what and what
Absolutely.
strategies are best, right?
Absolutely, and a lot of times they don't have the benefit of everything being dumped on them at once, right? They're waiting for statements in the mail. They get one here, one there. So what I try to do is encourage people to just have a folder and put it in a folder, and then bring that in, and we'll sit down and go through it, and we can kind of get organization. Because really, there's just so many pieces that they need to put together and understand how those fit together.
So if you could give 3 tips right off the top for people to start thinking that way and moving towards planning for their financial future, what would you say?
So
doable things that somebody can do right now.
Yeah, so the first thing that I would say is, if you're the spouse that doesn't manage the finances, at least become engaged and understand what's happening and where things are. So the first thing is to get engaged and understand what's happening. And just have that conversation once a month, once every 2 months. Have a conversation around it with your spouse. Ask some questions. Get a sense of what's going on. It'll help.
Without tipping them off.
I've had people say that when they take the book that's sitting on their car seat, and husband comes out and says, "What? You want to tell me something?"
Something I should know here?
Yeah. But so my second tip would really be for the spouse that is managing the finances or that is more involved, write things down. So write down a list of where are the accounts.
That makes sense
What's in the accounts, what information would somebody need to have. My in-laws travel a fair bit, and they go down to the down south every winter, and every year before they leave, my father-in-law prepares a document so that we have the information just in case.
Right.
It's in an envelope. We never need to look at it unless just in case, right? But we're informed, we're prepared, we know where to go to find the documents that we need, we know which lawyer to contact, we know, right? Like, that information is important. It gives peace of mind.
Yeah.
And you can go online and find some booklets where you can fill in things. We've got one in the office that we provide to clients, so they can just fill out everything. What banks have what investments or what assets or what security deposit box, right? So that would be my second tip. And then my third tip is really something that more recently has come up, and it's something that people who are investing, who are getting to that retirement stage and think that they want income in retirement, they need to sit down and understand the difference between income and cash flow.
Oh.
So income is not necessarily the most tax efficient, and cash flow can be achieved without the inefficient income, right? So tax inefficiency. So it's just understanding the difference between having income and cash flow.
So it's understanding the system.
Yeah, understanding. Yeah, it's a bit of understanding from a tax perspective.
Okay.
But there's a lot of talk out there about dividend-paying stocks and different things that people should be looking at. And I can give you an example. We had a client whose son-in-law has been helping her since her husband passed away, and the son-in-law called up and said, we'd like, Mom's just sold her condo, and we need to invest the proceeds, and we'd like her to have dividend-paying stocks, a portfolio of dividend-paying stocks. And we were able to show him how she would actually have her old age security clawed back if that was the method of investing that they went through. Whereas if she invested in a different way and was receiving, say, capital gains, and it's understanding the difference in taxes,
Yeah.
right? Then the old age security is not going to be clawed back. She can still have her government benefits as well as getting cash flow.
See, that's a good example of why you need a professional financial planner, because often people might think they know what they want, but they don't really understand the full implications.
And how can you know the questions to ask if you don't?
Exactly, because it can be so complicated.
Yeah.
The tax environment, all that kind of, which changes all the time too, right? So, but
Absolutely.
As a professional, it's your job to stay on top of all that stuff.
Well, and Janet, my business partner and mother, she's a chartered accountant background as well. So
This is your mother?
it is.
See, I was going to ask you that.
So a lot
Right
of
off the
people
top-
think
I
we're
can't
sisters.
believe
Oh
that.
my God! But I thought that's a really stupid question, Sandra. Don't even ask her that because you'd be embarrassing yourself. Holy cow! Okay, you got to buy this book just for that. See what financial planning does to your health. It makes you feel really, really good about yourself. Look at that. It's an anti-aging.
Yeah, totally.
Oh
I
my
mean, that's,
God!
We can't zoom in, but
Wow.
mother and daughter, folks. So
Wow.
Yeah, so
Your
she-
mom
and-
looks amazing. Please tell her that.
I will. Thank you. And so she has that tax expertise and that tax knowledge from being a chartered accountant. So that's one of the areas that we really differentiate ourselves.
So, from what you're telling me, because there's so many loopholes that you were talking about, so many different ways to look at this, depending on people's lifestyle, it really is unique to each and every person.
Absolutely. Absolutely. There's no cookie cutter approach
It's just now I know why
that you can take. You have to look at every situation individually. We meet with our clients quarterly, and we get a lot of kind of pushback in the beginning when we tell prospects that. But in meeting with clients quarterly, we're not meeting and just giving them their statement and saying, this is how you've done, this is what the market's done. We're actually sitting down with them and accomplishing something at each meeting. So we have one topic that we focus on, and we accomplish something there to move them forward and closer to achieving their goals. And, we know way more about our clients than, just the investments and
Well, there's
and
about
stuff,
developing
so-
that personal relationship, right?
Absolutely. And so everything and all that information all gets taken into account when we're making any recommendations. And then we tweak it as we go because, their situation might change or they've got other ideas of what they might want to do in retirement than what they thought they might want to do. So, so
Yeah.
we just...
So then they change too. Not just the tax environment changes, but they
Absolutely.
change, and so it's a good idea to, it's a moving target. You
Okay,
got to keep working with them.
most important question. You see them every 3 months.
Yes.
Okay. Do they buy you a Christmas gift?
No.
Because you have developed such a relationship. Because
No,
it's almost
I
like you
wouldn't
become part of the
expect one either.
family.
Well, see, it's funny you say that because we actually had a survey that, anyway, long story short, we had a survey that had to be done. We achieved elite status. Part of that process in achieving elite status, they survey 100% of your clients. So they actually go to your clients to get the feedback to make sure that you qualify for this level of
Wow.
satisfaction. And we, in getting the answers from the survey, some people put their names on it. You can see what they answered, and we always bring it up at meetings and say, that's great. Thanks so much for answering the survey, and just talk a bit about what they've said. And whenever we ask clients why it is that they are, that they like us, that they refer us and recommend us to their family and friends, they always say, inevitably, people say, you're like part of the family. We just get along so well, and we understand. Or they say to us that we understand their situation so well, and
Well, that's the greatest compliment.
it's like
I
part
would
of the family.
think.
So
Wow,
So
good
that's
job.
what you need, right? So
Well,
people.
and it also takes the fear away from finance when it feels like that, because there's a real fear around financial planning. Sorry, I didn't mean to cut you off, but there really is a fear around that. Sorry.
Okay. Well, I'm just going to say that so if people are resonating with you, and this is what it's all about, really, it's about that relationship. So if people are resonating with you right now, Jennifer, then they should get in touch with you. And what's the best way for them to do that?
So best way is either to, well, probably just give us a call. So our number's 905-896-8373. And they can visit us on our website as well at www.createwealthnow.ca.
Wow, so that's a good little
Yeah, and
summary of what you guys do. CreateWealthNow.ca.
That's right, and we always start off with just a phone conversation to understand their needs better and what they're looking for, and make sure that we'll be able to help them.
So that's a free consultation.
Yes,
And
then we do an in-person one as well to sit down and look at more details, complimentary.
Great. And where in 905 are you?
So we're actually located in Mississauga
Okay.
at Cawthra and Burnhamthorpe.
Okay,
So
great.
there's a little plaza there.
Okay, great. And if people want to get their hands on the book, Managing a Loan, which is probably the best concentration of information for people who are newly alone and trying to manage their finances, where can they get their hands on the book?
So they
can help. That's
they can find that on our website, and they can also go to managingalone.com
Oh, great.
Wow.
and find it there.
Okay. That's
All right.
awesome.
Okay. Well, thanks for coming in today,
Wow.
Jennifer. Great to hear
Thank
all this
you.
stuff.
Thanks so much for the opportunity.
So managingalone.com?
Com
Okay, great.
or .ca. Either one will work.
Okay,
They've
awesome.
got all the bases covered.
Okay, we're going to take a little break. We're going to
Sounds
come
good.
back with Luke and Julian. We're going to we're going to talk about sacred geometry. They're from the Infinite Source group, so that's right
Wow.
up your alley, Sandra. So we're going to just watch this video now, number
I
03.
didn't ask about the leprechauns, okay?
Don't worry about that. We'll get into leprechauns with these guys. So number 03, the Hubble. This is what they pointed the Hubble telescope into a blank part of the sky, and this is what they saw. And we'll be right back.
Bet you leprechauns.
Astronomers in 1996 attempted to do something extraordinary. They pointed the Hubble Space Telescope into a part of the sky that seemed utterly empty, a patch devoid of any planets, stars, and galaxies. This area was close to the Big Dipper, a very familiar constellation, and the patch of sky was no bigger than a grain of sand held out at arm's length. This was a somewhat risky move by the scientists. After all, observing time on this telescope is in very high demand, and some questioned whether it would be wasted trying to look at nothing. There was a real risk that the images returned would be as black as the space at which it was being pointed. Nevertheless, they opened the telescope and slowly, over the course of 10 full days, photons that had been traveling for over 13 billion years finally ended their journey on the detector of humanity's most powerful telescope. Their feeble signals collected almost one by one.